Christine Crocker. I'm the group's life insurance agent. A little bit about me. I am licensed to sell life insurance in California, Washington, Pennsylvania, New York, New Jersey, Connecticut, and Virginia. I was born in the Philippines, and I grew up on the East Coast in New York and Philadelphia. I went to Penn State, and I lived in New York City for 2 years before moving out here to the Bay Area in 2006. I am married to Devin. That is my husband. We have 2 daughters, Gemma and Cecily. Gemma's 4 and Cecily's 6. And we also have 2 dogs. They're 2 labs, Strider and Echo. Strider's 13. He's getting up there, and Echo's 8. As for things I like to do in my spare time, I am into photography. I took this photo of my girls. I like to travel. This photo is from a trip I took to Banff a couple of years ago. If you are friends with me on Facebook, you know that I like to play the ukulele and sing. And also, I like to bake sourdough bread. That's one of my more recent obsessions. So much so that I've started a different Instagram account just for my bread. Just to summarize what I can provide as an insurance agent with New York Life, life insurance is the obvious one, but I can also provide long-term care insurance, income and interest annuities, and I can also do business solutions, which is for your companies that can provide group term insurance, employee whole life, and long and short-term disability. Today, I'm specifically going to talk more in depth about long-term care insurance. So, why create a long-term care plan? There are several reasons to. First and foremost, you want to be able to take control over your care when the time comes, where it's going to happen, who's going to provide that care for you. Most people want to maximize the time that they have at home as opposed to being, moved into a facility, and you want to protect your retirement assets that you've saved so that you're not spending them down on long-term care. You want to protect your family because they're most likely going to be the primary caregivers. And most importantly, you want to add peace of mind. So long-term care is defined by your ability or inability to perform what are called the activities of daily living. Those are eating, dressing, bathing, transferring, that's your ability to move from one position and place to another, toileting, and continence. So by definition, if you cannot perform at least 2 of these activities of daily living on your own, then you would qualify for long-term care. Severe cognitive impairments like dementia and Alzheimer's would also qualify you to be covered by long-term care. Who's going to need long-term care? The answer is most of us. 70% of Americans who reach the age of 65 today will eventually need long-term care. So I'm going to walk through the important questions that you ask yourself and that I ask my clients to consider when they're developing a long-term care plan. And those questions are: who is going to provide that long-term care to you when and if you need it? Where do you want to receive that care? How will you pay for that care? And then finally, what's the solution in terms of getting that care for yourself? So the first question is, who would provide that care for you if you need it? Who would you want to manage your care? Who would you want to be your primary caregiver and then the contingent caregiver? Would you want a family member to provide that care? And if so, have you discussed it with that person that you have in mind? And you also have to consider what the potential impacts would be on that caregiver. So think about these potential impacts. Providing care for your family member or friend is a very noble thing. It's a loving thing to do. It's something that many people will experience, myself included. But it's really important to understand that there are potential implications for that care provider and for you as a recipient. And it's worthwhile to consider how having a plan for this care can alleviate some of those stresses for them. The average age of a caregiver is 45. And the percentage of all caregivers that are uncompensated female family members is 75%. The average time that family caregivers provide each week is almost 24 and a half hours. And the average time spent providing care when that care recipient is your spouse or partner is 45 hours. Where does long-term care take place? So long-term care usually will take place in one of these 4 locations: your home, your community, which would be like an adult daycare, a residential care facility or assisted living facility, and a nursing home. So these are things that you have to consider when you are deciding how you're going to plan where it's going to happen. And then the next question you ask yourself is, how much does long-term care cost? How would you pay for your care if you were at home, or if you were in a residential care facility, or in a nursing home? How will you finance that? Just to give you an idea, the national average hourly rate for a home health aide, that's somebody that's coming to your house to help you, is $23.27 an hour. The local average in Northern California is $27.56 per hour. In terms of an assisted living facility, these are the national averages and local averages. I can tell you right now, as you guys have heard from personal experience, that local average is probably close to double that. My grandmother-in-law pays $10,000 a month for her studio at the Truesdale in Burlingame at her assisted living facility. And then for a nursing home, obviously it's going to be more expensive because it's more intensive around-the-clock care. The local average right now for a private room is $163,000 a year. That breaks down to about $13,500 a month. So on average, the current average total cost of long-term care that a person will spend is $172,000. But remember that here in the Bay Area, we are well above average. So it's probably going to be significantly, more than that. So the solutions, how will you pay for this? Let's talk about possible funding options. Medicare, Medi-Cal, relying on your family members, paying out of your own pocket, or finally having a long-term care insurance plan. So there are 3 main types of funding options for long-term care: government programs, out of pocket, and then a mix of out of your own pocket and having long-term care insurance. Some people might ask, what about health insurance? It is not covered. Health insurance does not cover long-term care services. So some people will say, well, Medicare will cover my long-term care. Generally, it doesn't pay for it. There are very specific stipulations, and it will help pay for a nursing facility in some situations, but only for the first 100 days. And for only the first 20 days would it be fully covered. So beyond that, you're already going to be out of your pocket, and beyond day 100, you'd be completely out of your pocket. Ooh, that went fast. I'm going to skip forward a little bit. So one can pay for your own long-term care costs out of your own pocket, which many, many people do by your own income, by repositioning your assets, by paying from your savings accounts. Obviously, that comes with a lot of downside. So they say that if you haven't allocated assets specifically for your long-term care, then you've allocated all of them. I mean, that money is going to go fast. Long-term care is not cheap. And so one of the best options would be to also have a long-term care insurance policy. And what that would cover would be any of the things that we talked about: in-home care, adult daycare, residential care facility, nursing home, the equipment that you would need to be cared for in your home, hospice care. And like I said before, it's triggered by if you're going to need help with 2 out of the 6 activities of daily living. So things to keep in mind. Also, as a business owner, there are certain tax incentives to having a long-term care policy. If you are a business owner, you can deduct the premiums that you pay for long-term care. I'm not a tax advisor, so you guys would have to consult with Larry about that, or any business owner, but also the benefits that you receive from long-term care are tax-free. So finally, just to wrap it up, who is your who person? Share your plan with that person. Who would take care of you, and do they know that you want to have that responsibility? How will you fund that long-term care if you needed to pay for it? And how would spending thousands of dollars a month on long-term care impact your family and your retirement plan? And just in brief, Long-term care insurance is medically underwritten, and the younger that you apply for it, the easier it's going to be for you to qualify and the less expensive that it will be for you. So that sort of sums up a general how we get to forming a plan, and hopefully has made you guys think about what your plan is going to be for long-term care in the future. Thank you, guys. If anybody has any questions. Oh, there's no time for questions. Just kidding.
Christine, what's the average underwriting like when you're doing a long-term care policy?
So if you have not seen a doctor within the last 2 years, then they will require to come and take your height, weight, and measurements to see you physically, to take a blood sample, and then they will request your medical records from the last 5 years. If you have seen a doctor within the last 2 years, they wouldn't necessarily require to see you in person. They would just require your medical records, and they will do a telephone interview and a cognitive screening over the phone, which they'll just ask you questions.
And is there a, for example, if I applied today, I got approved next month, does it kick in right away? So if I only had paid for it for 6 months, will I be eligible, or is there like a time period that you have to wait to be able to use it?
So you can structure your long-term care plan to be very specific and customized. In most cases, there would be, say, an elimination period where, and the average is usually 90 days because of the fact that Medicare will pay, at least in part, for the first 100 days that you'll need. So you would be out of pocket or covered partially by Medicare for that first 90 days. And then after that, if you're still on claim, then you would start receiving benefits. And the entire period of time that you are on claim, you would not have to pay your premium for your long-term care insurance. It's waived during the claim period.
Perfect. Thank you.
Okay. Thanks, guys.